you everyone for joining, and thank you for having me. I think this event is a great initiative, and I hope we can all learn some very exciting things in every topic. So today there's a lot to talk about and not much time, but I tried my best to transmit the main ideas that I think will be more useful for you to start an investment. Let's start with a little bit about me. My name is Felicia Miller. I'm 26 and I'm from Uruguay. I've been living in Barcelona since 2019. Back then, I came to study a master's degree in finance. And of course, as everyone else, I fell in love completely with the city and I decided to stay. So in the last few years, I've been working a little bit in banking and also in asset management. And recently, I joined the fintech world, working as an operations analyst at inbestMe. I really feel this is a unique and a very exciting time to not only witness, but also take part in this transition towards a new era where money is changing and how we use it and how we invest and how we pay, everything is changing. So a fundamental part of this shift is sharing some financial culture with everyone. So here I am hoping to give you some exciting insights. The idea today is to go first over the basic steps on how to start investing, and then I'll give you a little insight of the financial instruments and the tools you can use to take control of your personal finances. One second, I'm going to have some water. So before even thinking of investing, first we need to take a step back and think about our financial plan. We've all witnessed how the world can change from one second to another. So it's very important to understand how we have to invest our savings and how to do it wisely. You must know that not investing your money, assuming you have some to spare, which you surely do, this has a huge opportunity cost. And I want to share with you some of the main reasons we have to invest. As you may know, due to inflation and some other economic factors, keeping money in your bank means we lose purchasing power. So say you have 100 euros today. These 100 euros will not be worth the same in 10, 15 years. They will, of course, still be 100 euros, but what you will be able to buy with that will be much less. So basically, while you're just sitting there in your couch or in your office with your money at the bank, you're losing money without even noticing. Another reason is that we have the power to put our money to work. Without doing anything, our good friend, the compound interest, I will not get into that, but I'm sure you understand it. This cannot just maintain our purchasing power with all what we saved, but it can also make our money grow. And this is very good. And a third and very also relevant reason nowadays that I can think of is the current situation of the retirement system. This is happening, what I'm about to explain, this is happening in Spain and in many other countries, but not in all of them because the retirement systems work differently in each country. But in general, there is a population issue, a thing happening with population behavior. So basically, the system here works in a way that we, all of us, the people who are working today, pay for those who are retired. The same way our children, the next generation, will pay for us, and so on. So what happens when the population starts shrinking? It's getting smaller. There's simply not enough money in the system to sustain us all. And this will happen a couple of years from now. And you know what? There's no solution yet. So what I want to say is we have to take action and we have to start thinking of retirement very early on. This is crazy, right? I, 26 years old, can think of many other things I'd like to save for other than retirement, but this is something good. We have time on our side and we can start small and start putting our money to work for us. So once we understand all of these reasons to have a financial plan, there is still another very important step to take before we think of putting our money in an investment, and it's called the emergency fund. Having an emergency fund is crucial. Why? Because in order for our investment plan to provide the returns we expected, we have to try our best not to touch it, to change it in any way. Especially, it is very important to avoid making withdrawals before the objective, the time objective, to cover, I don't know, emergencies or other temptations. For example, I don't know, maybe I have 2,000 invested euros and my friends, they want to go on a trip, say to Bali or wherever. And I say, no problem. I sell my positions or whatever I have invested and I use that money. This is the worst you can do. The worst you can do, because all the progress you made is going to, you have, when you start again, you will have to start from scratch. And this is not something you want. So how do we avoid messing with our financial plan? With our emergency fund, which is designed to be a money that is kept in a little box for any unforeseen changes. And how much should be in the emergency fund? Well, there's no right or wrong, but the rule of thumb is more or less 6 months worth of salary. It can be more, it can be less, depending on your working circumstances and also other factors that may come to play in your budget. So, okay, once that is covered, green light, we can start with the plan. There are 4 basic steps that you have to follow once everything is set. First, you need an objective. Second, you need to figure out your risk profile. Third, you need to know your expenses. And fourth, and most importantly, you need to commit to the plan. So let's start with the beginning. The starting point is the objective. It might seem obvious, but it's very important to define your objective, which will influence all that comes after. Imagine you're going to a trip. The first thing to do is to define, of course, where you're going. The objective needs to be concise. For example, I want to buy a car in 3 years. Your objective needs to be numerical, and it needs a time horizon in order for it to be measurable. Otherwise, you won't know if your investment is going very slowly or very quickly, or if you need to make adjustments. And of course, needless to say, it needs to be realistic. The second step is figuring out your risk profile. The level of risk you can assume in your investments will be reflected in your portfolio composition, or in other words, in which investments you make. In general, this is the basic rule, the more risk you take, the more potential returns you will obtain. But not everyone can take the same amount of risk or any amount of risk. So to determine your risk profile, you have to consider a series of things. Your age, which will determine your time horizon, your job type, your family structure, where you are. You're in Spain, you're in Europe, you're in America, in Uruguay, where are you? Also, the level of financial knowledge, so if you're a sophisticated investor or not, and if you own any other assets, such as a house or something that can act as a backup in case you have a problem with your investment. All of this will help you decide which financial instruments are better suited for you and how much of that each financial instrument you will include in your portfolio. And there are many, in case you haven't figured it out yet, there are many online tools there for you. One last thing is that always, regardless of your risk profile, you have to have a diversified investment. Don't ever put all the eggs in the same basket. You have to use at least 8 to 10 different products, better even if they can behave differently under different market scenarios. Some more water. Okay, step 3. One thing you must remind yourself is that it's very hard, not to say impossible, to predict the market, even so, especially if you're a basic newcomer investor. Even the most skilled investors make huge mistakes. So trying to be ahead all the time and looking at the news and at Bloomberg and everything, that is a bad idea. Not only because you will probably get it wrong because it's very unpredictable, but you will also incur in high transaction costs, which in other words means less returns for you. So in step 3, let's better focus on predicting what we can control. So which are your expenses, for example? Which are your fiscal obligations regarding your investment? And this you can do by paying attention to brokerage fees, to management fees, to the fiscal benefits that your investment may have, and also by implementing tax optimization techniques. Last but not least, remember to commit to the plan. This is the only way you will achieve the results you planned for. So think long term, and please don't lose perspective and don't panic if you see the markets going down. So for example, take the example of last year. Most investors who got scared and removed all the money during the COVID market crash lost a lot more than those who stayed put, and surfed the panic wave. Now the markets are doing better and they have recovered almost everything of their investments. Okay, so having said all of this, and before jumping to the proposed solution, let me first introduce you to an important topic you need to understand first in order to make sense of the solution I'm going to say. So broadly speaking, there are two main strategies you can take upon deciding your investor profile, your investor style. You have active and you have passive strategies. Regardless of the strategy you use, every investment needs a benchmark, which usually takes the form of a reference index. For example, in America, the S&P 500 is one good reference index. And it is used basically as a comparison to understand how well your investment is going. So having said this, active strategies always try to beat that benchmark. How? By speculating or by using some complex techniques to outperform the market. On the other hand, passive strategies, they basically copy the benchmark. Okay, they replicate it. But wait a minute, how does that copying a benchmark get us good returns? Well, why? Because with a long-term perspective, always the general market tendency is that prices are rising. So if you invest in the market, in all the markets, rather than trying to pick specific securities, you will make probably a good investment because prices are always rising. Also, an important reason about passive management strategies is that they come with minimum costs. They are much, much smaller than active management, which of course results in enhanced returns. So please take a look at the following graph. This is proof of what I'm saying. In United States, over a 5-year period, and this data is very up to date, 75% of all active managed funds, so active strategies, did not surpass their benchmark. They didn't beat it. Okay, so in this case, in America, the most well-known benchmark index, as I said before, is the S&P 500, which is our reference. This considers the largest 500 American companies. And as you can see, the statistic is increasing as more years are taken into consideration. This is very important. If we think that we're planning for the long term for 20, 30 years, this says a lot about the decision you're about to make. So it is highly probable that your investment will underperform the market if you choose an active strategy. And it is hard enough to understand all the steps that I already explained earlier. Imagine trying to figure out which of the 25% active managed funds is the one for you. It's very difficult, okay? So maybe it's better to consider investing in an index fund or in an ETF, which are the two most used passive instruments. Here I've included, just to put it down to earth, because we are in Europe. In Europe, the situation is the same. Sorry, some people into the presentation. Let me second. Because I read that some people are trying to get in. Admitir. Okay, there we go. So going back, the situation in Europe is pretty much the same. And here's some more data which illustrates how indexing usually works better. On the left, you can see the returns of active investment funds managed in Spain. And on the right, on the green box, you can see the indexed equivalent from all the world, not just from Spain. This data is from April of this year, so it's very recent. You can see easily how the passive strategy has proven better results, recording around 3 to 5% more returns in all of the categories: USA equity, European equity, and emerging markets. So it's not a thing of which market you're investing, but it's rather something that covers all the options. Maybe you're thinking, what is this lady talking about? How come this looks so good and this is not something everyone talks about? Well, to give you a little more context on what has been happening to indexing, I'm going to show you this graph. This is Vanguard. Vanguard is one of the most important and biggest asset management firms in the world. And they've been reporting, they created indexing. They are the ones who invented it. And they've been reporting the amounts of all the capital in the world that is invested under this modality. And as you can see, the trend is going like this. In the last decade, we have reached $6.2 trillion. This is a lot. And I hope to see that this says something. Okay, let's quickly go over about these indexation instruments that I mentioned before. What are they? They are basically financial vehicles made up of a pool of money they collect from many individual investors. So as an investor, instead of owning every asset of the market individually, you own a portion of the fund. So each of these vehicles, the ETFs and the index funds, they invest their money in thousands of securities. And this means they are very well diversified. Remember what I talked about earlier? This provides one product that englobes many securities. And this is what we want for our investments. By having an investment policy which is replicating the market rather than beating it, the management fees are extremely low. This is also very important. Remember about controlling expenses. It means more return goes to the investor at the end. Okay, so after all this kind of technical stuff, let's suppose you get it, you understand index funds, you know what you want to invest in. There's still plenty of things you have to do in order to go from planning your investment to building your portfolio. And as you can see, the list is quite long. You have to select each fund, you have to work with a broker to buy and sell, you need to rebalance your portfolio in order for it to maintain the risk profile you want, and you need to keep track of new products, and on and on. Okay, so guess what? Some very brilliant people who understood how technology can be applied to make all of this process very simple have created a way to take care of all of it for you. So here comes my job. What do I do? At inbestMe, we provide automatic portfolio management solutions to individual investors using the instruments I just introduced you to. We offer 3 different products to cater all of your needs, and they work all under the same indexing philosophy. They can be fully personalized. How? Because we offer 11 risk profiles, and you can have your portfolios in dollars and in euros. This is something very cool about this, is that you can upgrade or downgrade your risk profile if, for instance, your circumstances change. At inbestMe, we really try our best so this tool is accessible for everyone. You don't need a huge bank account or a huge amount of savings to start. You can open an account with just 1,000 euros, and you can, something also very cool, you can program recurrent fundings to your account at the rate you can handle, maybe once every month, maybe once every 3 months, or whatever works for you. And this is very helpful to maintain your saving discipline. Basically, you don't have to do anything. We do it all for you. So one last thing, we are very transparent. We know that your money is important for you, and you will want to know where it is invested at every point. So we will make sure of that, and the rates will be around 0.5% of your capital per year. This is very low compared to other market rates. So let's take a look at what this means in terms of returns, just as a reference. The chart you are seeing on screen shows the average annualized returns of 3 sample portfolios with 3 different risk profiles. Basically, profile 1 is very low risk, very conservative, and profile 10 is the most risky one. I selected these 3 to illustrate, of course, how the higher the risk profile, the riskier the portfolio, and the higher the returns. And our reference to the right is the average annualized return of all managed funds in Spain over the same period. These include passive and active managed funds, of course. So come on, it's easy to see how indexation has been working for us. Of course, wait, this is an average. This doesn't mean that you will achieve exactly these returns every year, but you see that in the long term, the strategy works pretty well. So, okay, Felicia, all of this is great, but what if I have more than one investment objective? This is the most normal thing. This is also contemplated by offering every investor the possibility of having multiple accounts, multiple portfolios, each with a different risk profile and a different target or goal. So, for instance, you can start planning for retirement, let's say, and also grow your savings to help you buy a flat. Or you can have a savings account for you and another one for your children. You can think of whatever combination works best. If you're not sure how to build the portfolio mix, a great way to think of it is like what you're seeing on screen, like a pyramid structure. In general, the longer the time horizon of your objective, the higher the risk you can assume for that portfolio. Okay, because you have a longer time horizon to recover from any market fluctuation. And you never, I put it there so you don't forget, the emergency fund must always be there. Okay, so here you can take a look at how your inbestMe account would look like. So to wrap this session that I know has been a lot to take, I would like to end by introducing you to one last concept, which is an added value to our inbestMe products. It is called custom indexing, and it enables investors to apply a certain theme, a certain thematic to his or her investment style, while still enjoying the benefits of indexation. There are many thematic biases, but the most renowned are the sustainable investing thematics, or also called SRI, which stands for socially responsible investment. There are also innovation and the mega trends techniques, which include a lot of disruptive technology, things that are going on today, such as robotics, cybersecurity, health tech, everything. So, and we also have the more traditional, we must not forget, the value investing or the dynamic portfolios, which have the central strategy and a small part which is adjusted all the time according to market circumstances. For instance, if you believe in fighting climate change, or you want to contribute to a more fair and inclusive world, which is, I think many people are joining this tendency, and we want to have an impact through our investments, then you can open an SRI index fund account, for example. And how does this work? Well, this method selects in the global portfolio of funds, it selects only those who have a good scoring, a good ESG scoring, it's called. And this, for example, would leave the oil industry out, the smoking, alcohol, all of this harmful stuff, it won't be included as part of your portfolio, okay? Or you can also have funds that only include companies whose objective is to have a positive impact. So it's incredible how this theme has grown in the past year. And to illustrate this, I included this brief statistic that says that by 2025, a third of all of the investments in the world will have these characteristics, will be ESG driven. And inbestMe has been the first automated platform to introduce this theme, and it's been a success to the point that today our sustainable portfolios represent 40% of all the invested capital, and they are reaching returns which are as good or even better than the traditional strategic portfolios. This is amazing. So this is all from me today. Thank you a lot for joining. And my recommendation, as it says on screen, is start today. The tools are there for you and you have the power to do it. So please feel free to contact me, contact inbestMe, ask anything. And I suggest you that inbestMe has a very, very cool blog about how everything works and how to understand a bit every financial instrument. So feel free to go in and search it. And if you want, you can schedule a call with my very talented team. Thank you very much.
Okay. Felicia, do you have time for a question or two?
Sure.
All righty. One of the things that's in line with the theme for the Working Women Week, can you talk to us? Can you give some insights into how young women who are introducing themselves or starting their careers, their professions, how does inbestMe relate to them?
Well, I think inbestMe is a great example of how empowerment can reach every individual. And you can learn a lot by start researching and trying yourself. So this is a great, I think it can relate to how working women are starting to, empower in every area. And I think this is only going to grow more and more. So this is great.
Okay, and Ali had a question about platforms. I don't know if you're able to see that.
In the chat, right? 1 second. Yes. Are there private investment platforms here in Spain? There are many in UK and USA, but I don't know of any in here. Yes, there are many. Particularly in my field, in the robo-advisors, there are a couple. But yes, and you can also always invest in your bank, or if you have an investor advisor. Yes, there are plenty. I'm sure you can find a lot here.
Then we have
another question. How do investment portfolios like this fit with wider financial management? How is best way for young women around 30 to get advice about financial strategy? This is part of the wider financial management. As I said, I don't know if this is related, but you can have many portfolios here or wherever you invest with different objectives. It can be a global one, which englobes everything, or you can have ones that are tailored particularly for each of your objectives. And how is the best way for young women to get advice? You can always ask your bank, and you can join us. There are plenty of blogs. I recommend you some financial journals that will keep you always up to date. We can talk about it later.
Can I ask you, Felicia, what is the biggest challenge sometimes for a young person, male or female, to begin investing?
I think the biggest challenge, and I witness this with my friends a lot, is there is a like preconceived concept that financial markets are something very complex and inaccessible for everyone, and it's really not that it's not hard at all. It's just understanding some basic rules, some of the things that we talked about before, and you can just get to it, and it's going to benefit you for all of your life. I think that is the hardest thing, like getting through to people to lose that fear, no? To just get in.
Okay.
Can you recommend any? Oh, sorry, I'm a little back in the chat. Can you recommend any of those investment platforms here in Spain and aren't banks? Yes, of course. Number one is inbestMe, inbestme.com. I think you see it in the screen. And but there are many other robo advisors. Uh, Indexa Capital, Finisense. I'm sure if you want, we can talk later, but there are many options for you. Excellent question about the international portfolio. Okay. I don't know if there's anything else. Feel free to ask.
Last question for me. The issue of sustainable, I guess, sustainability within the kind of funds that you choose to work with. Do you see a continued progression more with women on these things, or is it just one in general that is? I can see it going on, but I don't know if women have a particular interest in these types of, I guess, related organizations.
Um, I don't have the information as to how much of all of those accounts which are shifting to the ISR, to the more sustainable investing, how much of these are women. I don't have that information here, but I don't know. I think it's more of a general tendency. Maybe women are more socially conscious or more sensible about this stuff, but I wouldn't make that assumption. I think this is a generalized thing that is gradually, penetrating all of societies, and we are learning about how relevant this is for today and how some people really want to, put their small um, grain of sand to help the world.
Okay. There is a request regarding, if for digital nomads, and I guess our crowd, they travel quite a bit. There was a question about international portfolio platforms, and if you are, what are the implications if you reside in multiple countries or in different countries if you change?
Okay, there's a lot of information in our blog, but basically, depending on the financial instrument, for instance, you can have all of our products from all of the world, but we recommend if you're in Spain, index funds, because there is a financial incentive, which basically means that you won't pay taxes every time you buy and sell your products, but rather you will only pay for the capital gains when you withdraw the money. So if you change your money from fund to fund, there's no tax loss there, but rather at the end. And but yeah, you can invest in our platform from any part of the world using ETFs and index funds. Pension plans are only for Spain.
Okay, so it does not require for somebody to be a resident of Spain
No,
or
no, not at all. You can or not. We have a lot of international accounts.
okay.
Okay, if there's nothing else.
Well, we want to take the time to thank you very much, Felicia. That was a powerful presentation. Clearly, you know what you're talking about. inbestMe is offering some really cool stuff, and we very much welcome your insights. And I encourage people to call or contact inbestMe to take a look at their blogs and to find any relevant information that can help you, start saving and begin to invest as soon as possible.
Sure. Feel free to reach out to us, and we'll be happy to help. Thank you for having me.
Okay, thank you. And thank you to everybody for joining. We have a few more events at Working Women Week.